It is 7:59 a.m. Pacific Daylight Time. It is the 18th day of June 2026. This is episode 1344 of Bitcoin. And what happened? Warsh. The Warsh cycle came in. And he said things. We'll talk about what the Fed's decision was at the opening story of the show. Then we're going to launch over to Oman. Bitcoin mining pool is in the works over in Oman, which I think is great. I mean, they're energy rich. Why not? Christine Lagarde seems to have been involved in the whole Binance MiCA application thing in Greece that I told you about yesterday. We'll get some details on that. And France phasing out non-quantum encryption across the country. I wonder. I do. I'm kind of skeptical on that whole thing. Second part of show, Ryan Salame's wife is facing charges about the FTX funded congressional run. Estonia wants to give AI agents licenses. And let's see, CME chief executive says the company plans to sue the CFTC because of perpetual futures approval. And then ending out the show is Aztec. They got hit by another exploit in less than a week, and I didn't even see the first one, so this is news to me. It's going to be your final warning shot. And speaking of warning shots, Kevin Warsh, our new Fed chair, signaled possible rate hike. Yep, that's what he said. It was the comments that Kevin Warsh made, not what the Federal Reserve did with their interest rates. Here's Micah Zimmerman, Bitcoin Magazine. The Federal Reserve held interest rates steady at its June meeting, but signaled a shift towards tighter policy under the new chairman, Kevin Warsh, marking a decisive turn away from expectations of near-term easing. The Federal Open Market Committee, also known as the FOMAC, left the federal funds rate unchanged at a rate of 3.5 to 3.75%, in line with market consensus. The policy statement and updated projections, however, pointed to renewed concern over inflation and a growing willingness among policymakers to raise rates later this year. Officials now expect the benchmark rate to reach 3.8% by the end of 2026, up from 3.4% projections of March. Rate expectations for 2027 and 2028 also moved higher, signaling that restrictive policy may remain in place for longer than previously anticipated. And the shift comes as inflation pressures persist across the U.S. economy. The Fed now forecasts headline personal consumption expenditures inflation of 3.6% in 2026, with core inflation at 3.3%, both above prior estimates. Policymakers pointed to supply shocks tied to the Middle East conflict and elevated energy costs as key drivers. Economic activity is expanding at a solid pace despite elevated uncertainty. And that's a quote from Kevin Warsh, while reaffirming the Fed's commitment to restoring price stability. And of course, Bitcoin's price has dropped after the announcement, trading under $64,000. The meeting marked Warsh's very first as Fed chair following his confirmation last month. His arrival appears to have influenced both tone and communication strategies. The post-meeting statement was shorter and omitted language that had previously suggested a bias toward rate cuts. That was the other thing that was being said. Just I'm pausing here to say that. They changed the dot plot. So the entire language of, let's see, Jerome Powell, Trump hated him because he wouldn't lower rates, right? But the dot plots kind of kept everything in line, saying, well, maybe. But now we got Warsh, and they changed the dot plot on rates completely. The entire tone from the Federal Reserve has changed to a decidedly more hawkish stance. And Trump made some comments yesterday, said that, well, they was being asked, what he thought about the fact that the Federal Reserve rates remain the same, and he's got hawkish language coming out of the Fed now that is, like I said, decisively more hawkish than what Jerome Powell's Federal Reserve was saying. And Trump said, no, he's a great guy. Whatever he decides to do, I'm sure it's going to be great. So who knows? Again, it is a who knows situation going on. Warsh used his first press conference to frame the decision as part of a broader shift in how the Fed approaches policy and communication. He described the meeting as a good family fight and emphasized that the central bank is entering a new chapter. Now, he declined to provide forward guidance on the rate path and reiterated skepticism toward the Fed's traditional use of projections. Warsh did not submit his own rate forecast, underscoring his long-standing criticism of the dot plot as a policy tool. Instead, he signaled openness to changes in how the Fed interprets economic data. Warsh noted that many official indicators rely on survey-based methods that may lag real-time conditions. He suggested that alternative data sources and improved analytics could play a larger role in future policy decisions. On the economic outlook, Warsh pointed to mixed signals on how restrictive current policy is. He cited weakness in housing as evidence of tight financial conditions, while noting that strength in broader markets complicates that assessment. He also highlighted the growing impact of artificial intelligence on the economy, calling it one of the most significant structural shifts in decades. And the Fed has established a task force to study how AI could affect productivity, employment, and the transmission of monetary policy. The policy pivot comes amid political pressure for lower rates, though Warsh stressed the importance of central bank independence. President Donald Trump has called for easing in recent months, but has also stated that the Fed should act without direct influence from the White House. Now, for markets, the message from June's meeting is clear. The Fed no longer sees a path toward imminent rate cuts. With inflation above target and growth holding firm, the risk of further tightening is returned to the forefront. So that's the end of the article, and that should tell you everything you need to know about this shift, because the shift is affecting global markets. I mean, even the Dow, the NASDAQ, the S&P, they're all kind of down. But if you pull back a little bit, and if we're just looking at the equities market and legacy financial land, I mean, shit is drifting around all-time highs. It's not at all-time highs, but it's, if you pull back and look at the charts, it's like, holy shit, we're kind of around all-time highs. And that's in the market, and we kind of know that thing's overheated. So it makes sense to me that Kevin Warsh would be taking a hawkish tone to cool the equity market off, because the last thing anybody needs coming into midterms for this administration is a complete meltdown of the market. So if they start talking, because it's like he's just saying words at this point. Yeah, he's taken a decisively more hawkish tone. However, it is still at this point just words, and it may be a tool to inject sentiment into the market, because remember, the market is a psychology machine. It doesn't really reflect real value anymore, which is a shame, but it probably hasn't reflected real value for a lot longer than any of us actually think. That said, it makes sense to inject that kind of psychological sentiment into the market to cool that son of a bitch down. Because what they might be able to do with this is keep shit steady, maybe keep the market a little bit below all-time highs, maybe dip a little bit more, and then right before midterms, say something that causes the market to absolutely scream right before people go to the polls. It would not, I would not put it past them. I swear to God, I would not put it past them. Okay, let's go over to the Gulf area where Oman launches mandatory national Bitcoin mining pool in state-backed push for regulatory control, Micah Zimmerman, Bitcoin Magazine. Oman has taken one of the most direct steps by any government to bring Bitcoin mining under formal state oversight, launching a mandatory national mining pool that licensed operators across the Sultanate are required to join. The pool, omanhash.com, was launched by Oman's Ministry of Transport, Communications, and Information Technology and will run in cooperation with Frontier Technologies LLC, an Omani blockchain and Web3 company. Energix Global, a vertically integrated digital energy and infrastructure company, built the technology platform and liquidity infrastructure behind it. The company called it the official national cryptocurrency mining pool of the Sultanate of Oman. Under the approved regulatory framework, omanhash.com is the sole official and mandatory mining pool for all licensed cryptocurrency mining companies in the entirety of the country. The pool is expected to consolidate roughly 10 exahashes per second of compute power in its initial phase, a measure of the total compute work directed at securing the Bitcoin network and, by extension, minting new coin. That hash rate is important. The more concentrated and regulated that hash rate becomes within a national framework, the greater the government's visibility into mining revenue, energy consumption, and the flow of newly minted Bitcoin. It seems the country is not trying to ban or restrict the activity. It seems to be pulling it into a structured, trackable system. The country has been one of the most active jurisdictions in the Middle East for industrial-scale mining investment since 2002, when the ministry launched a $370 million hydro-cooled mining facility in Salah. Total investments in mining and data center infrastructure in the Salah-free zone have since surpassed $700 million, including two major facilities built in 2022 and 2023. Alps Blockchain, an Italian firm, bought a 150-megawatt facility in Salah to full operation in mid of 2025, and Oman's omanhash.com reflects the government's next phase, pulling the accumulation of capacity into a regulated, transparent national architecture. For Energix, the mandate is its second sovereign pool contract. The company built and operates BTCpool.kz in Kazakhstan, where a 2023 digital asset law required licensed miners to operate through government-accredited pools and report revenue to tax authorities through an automated system. The addition of omanhash.om. Okay, omanhash.om brings Energix's combined pool operations to 25 exahashes across three pools. Quote, "This is our second sovereign mandate, and it validates the model that we've been building in Kazakhstan," says Olhas Amarov, Chief Business Development Officer at Energix Global, in a company press release, noting that licensing frameworks help miners operate within the law, avoid punitive taxation, and communicate with regulators. Oman's approach stands as a contrast to jurisdictions that have pushed back against mining with outright bans or heavy tax burdens. Instead, the Sultanate has embedded mining within a broader economic diversification strategy and is now adding a layer of centralized control that keeps Bitcoin production inside the country's regulatory reach. The next target for growth, Energix said, it's looking at a hash rate of 30 exahashes per second. So not anything to sneeze at right there. On to the EU, where the ECB president, Christine Lagarde, has reportedly ordered Greece directly to reject Binance's MiCA application, which was close to approval. Binance MiCA license application in Greece has stalled following alleged direct interference by European Central Bank President Christine Lagarde. According to Gareth Jenkinson of The Block, Binance's application has cleared most Greek regulatory requirements and was on track for approval before the ECB intervened. Jenkinson's source indicated that Binance had essentially received the green light before the ECB stepped in. Lagarde's stance on cryptocurrencies and stablecoin in particular has long been known. As previously reported by Atlas 21, the president has actively pushed for the digital euro as an alternative to dollar-denominated stablecoins. At the Banco de España LATAM Economic Forum in May, Lagarde described the case for euro-denominated stablecoins as much weaker than it appears. Binance CEO Richard Tang addressed user concerns on X, writing that the exchange is committed to its European users and to operating under a clear, fair, and compliant framework. In a subsequent post, Tang stated that customer funds remain safe and accessible at all times, adding that the company would provide further updates before June the 30th. So it looks like Christine Lagarde has directly intervened in the application for Binance's Greece MiCA approval. Now they're looking to France. That's sort of their last-ditch effort to remain in the EU, but they've got to do this shit by July the 1st. They've got to have it in place and active on July the 1st. Otherwise, they have to shut down operations until they can get that shit cleared up. So, you know, if you look at some of the news stories, they're saying, oh, man, it's all over for Binance. No, they'll just have to shut down operations until they can get it figured out, if they can't get the shit done by July the 1st. But it's not like if they don't get it done by July the 1st that they're just going to pack up and leave. I mean, they might, because, you know, MiCA is a regulatory hurdle that is probably more than anybody's wildest imaginings of a headache. And they may just bail out because of it, but it doesn't mean that all they would have to do is just shut down operations, reapply, get the approval, and then open back up. I don't see it as any kind of weird problem whatsoever. France, speaking of France, they're going to phase out non-quantum encryption as Bitcoin security concerns grow. This is out of decrypt.co. Jason Nelson writing, France is preparing to phase out security products that lack quantum-resistant encryption, underscoring the growing concern about the future of cryptography securing everything from government networks to Bitcoin. According to a report by Reuters, France's cybersecurity agency ANSSI announced this week that it will stop certifying security products that do not use quantum-safe encryption beginning in 2027, advising that companies should be only should buy only quantum-safe products by 2030. ANSSI certification is required for French government agencies and critical infrastructure operators, making the decision a de facto phase-out of older cryptographic systems. Quote, it's not only a technical issue, ANSSI Chief of Staff Salame Sousa said at the annual France Quantum Conference. Quote, it's a matter of governance, industrial planning, regulation, and sovereignty, end quote. The policy change comes amid growing concern about Q-Day, or the expected arrival of quantum computers powerful enough to crack modern encryption. And while quantum computers capable of breaking modern encryption do not yet exist, estimates for their arrival are shrinking. In March, Google set a 2029 deadline to transition its systems to post-quantum cryptography. The announcement comes as parts of the crypto industry debate how best to prepare for their own quantum future. Earlier this year, the Ethereum Foundation formed a dedicated post-quantum security team, formally elevating quantum resistance to a top priority of the network. Still, some industry executives cautioned against viewing the latest projections as a sign that the quantum crisis is imminent. The risk is going up, but it was expected. As we get closer and closer to a target date for full migration to post-quantum cryptography, the confidence in that timeline generally goes up. Boundless CEO Shiv Shankar previously told Decrypt, there's no cause for panic. The smartest and most brilliant minds in the world are active on this problem. And I've said that before, simply about just Bitcoin developers. They've been thinking about, I know they've been thinking about this shit since at least 2015. At least. Because my own boss, who knew enough about Bitcoin to be dangerous, but not enough to figure out how to buy it, or that he should buy it, was concerned about quantum in 2015. And he's been a programmer all of his life. He knows code. And that was one of the very first things that he was asking me about was, well, if it's cryptographically, if it's a cryptographic system, what about quantum? So if he got it that quick, it's not like the Bitcoin developers haven't figured it out. Let's run the numbers. CNBC Futures and Commodities. I guess Trump signed that deal because I can tell in the energy markets. Brent North Sea is down 3 1/4 to 76.98 a barrel. West Texas Intermediate is down 3.5 to $74.06. Natural gas is the hedge, 1.65% up today to $3.19 per thousand cubic feet. Gasoline is down a row of sticks to $2.87 a gallon, just in time for summer travel. Merbon crude is down almost 4 points to 71 4 dimes. Metals are all down because they're considered risk assets. Palladium is down 5 points. Gold is down 2.5 to 42.71 7 dimes. Platinum is down 3.8. Silver really getting gut punched, 6.14% in the red, $66.42 per ounce. And copper is down 1 1/3. Ag is mostly in the red today. Biggest winner is rough rice, 2.7% to the upside. Biggest loser is, again, chocolate, 3.09% to the downside. Live cattle down 1/10 of a point, but lean hogs are up 1/3. Feeder cattle are up 1/5 of a point. And it looks like there's a little bit of reversal in the indices today. S&P is up a point. NASDAQ is up 2 1/4. And the Dow is up almost a half point, with the S&P Mini up just under 1 full point. We're looking at a price of Bitcoin at $63,380. That is a $1.27 trillion market cap. We can still get 15 ounces of our favorite shiny metal rock with our 1 Bitcoin, of which there are 20,044,351.14 of. And rates, the charges for making a Bitcoin transaction are nominal. There's about 45 blocks carrying 108,000 unconfirmed transactions waiting to clear at high priority rates of 3 sats per VByte. Lows will get you in at 1. Hash rate holding at 928 exahashes per second. That's more security than we need. And just a reminder, go to bitcoinandshow.com. That's my website for the Bitcoin and Show. There, I've got most of the shows I will kind of condense down into some written verbiage to give you a lay of the land if you just want to kind of scan the news that I'm covering today. It also has a link to the actual episode for that day. I don't do it every day, but sign up for the email, and whenever I drop one of these things, you will be notified. And no, I don't sell or give your email addresses to anybody. From LaGuardians of the Empire, yesterday's episode of Bitcoin, and I got LNPC with 2,222 sats. No, that's INPC. Sorry about that. He says, free the FTX. Nick Dose with 235 says, cheers, right back at you. Noster Gang says, go away, SBF, and I couldn't agree more. That's the weather report. Welcome to part 2 of the news that you can use. Ryan Salame's wife to face charges over FTX-funded congressional run. Jesse Coughlin, Cointelegraph. Michelle Bond, the wife of former FTX executive Ryan Salame, will face illicit campaign finance charges after a judge rejected her argument that prosecutors promised Salame that she would be cleared if he pleaded guilty. Manhattan federal judge George Daniels on Wednesday denied Bond's bid to dismiss an indictment that alleged she illegally took money from the now bankrupt crypto exchange FTX to help bankroll her unsuccessful run for Congress in 2022. Daniels wrote that there was no ambiguity in the terms of Salame's written plea agreement, quote, as the evidence made clear, all parties, including the defendants and their counsel, were aware that the government had not promised Bond's immunity by the time Salame entered his guilty plea, he said. FTX's high-profile collapse in 2022 shook the cryptocurrency industry. Yeah, we know. Let's see. I'm trying to think look to see if there's anything else about Bond in here. Yeah. Bond claimed that then Manhattan U.S. Attorney Daniel Sassoon told her and Salame's lawyer in 2023 that, quote, without making promises outside the four corners of the plea agreement, if Salame pleads guilty, then prosecution would conclude the aspects of our investigation that concerns Ryan Salame, but not Sam Bankman-Fried. However, Daniels wrote that the evidence undisputably indicates that the government did not promise to not prosecute Bond in exchange for Salame's guilty plea. And he added that Bond's former lawyer, Gina Parvalicho, admitted as much under oath, testifying that regardless of what discussions were had, she did not believe Sassoon's statement was a promise at the time that it was made. Prosecutors first alleged in August of 2024 that after Bond launched a bid for a House seat in 2022, Salame orchestrated a consulting agreement between Bond and FTX where she was paid $400,000. The government alleges Bond then used those funds to illegally finance her congressional campaign, along with hundreds of thousands of dollars in additional funds that Salame wired to her between June and August of 2022. Prosecutors claim that Bond attempted to conceal the source of the payments and made false statements to a congressional committee and the Federal Elections Committee. She is facing charges of conspiring to cause unlawful political contributions, causing and receiving a straw donor contribution, along with causing and accepting excessive campaign contributions and the unlawful corporate contribution. Each of the four charges Bond is facing carries a maximum of 5 years in prison. Holy shit. I don't think she's getting out of this, man. Oh, well. Shouldn't have taken the money. I mean, how is that not a conflict of interest? If your husband is over at FTX and you're taking contributions from FTX for a congressional run, that by itself is a huge red flag for Federal Elections Committee. I don't know, man. Whatever. On to Estonia. They want to give AI agents their own national ID. Jose Antonio Lons writing this one for Decrypt. Estonia wants to give artificial intelligence its own government ID. Prime Minister Kristen Michael said Wednesday he had approved an SD.AI Advisory Council proposal to issue AI agents a personal identification code, a digital identity separate from the human, company, or institution the agent works for. Michael framed it as a fix for a problem that already exists. An agent that books a flight, files taxes, or edits a document today usually has to borrow its owner's entire digital identity to do it. Estonia, he said, could become the first country to create an official digital identity for AI agents. Michael sees this move as a preparation for the agentic future that is nearing. In the future, artificial intelligence will carry out digital actions on behalf of a person, company, or institution, compiling reports, preparing declarations, or communicating with information systems. Quote, but it must be clear who is acting on whose behalf, with what rights, and who is responsible, he wrote. Michael argues it is important to give AI agents limited, controllable, and auditable authorizations instead of simply trusting providers with access to all personal data in order to have a functional agent. The council's proposal would let an agent's ID specify exactly what it's cleared to do. Michael lists actions like view a record, draft a document, make a payment up to a fixed amount, rather than inherent blanket access to everything that its owners can reach. That distinction is, well, about who's already deploying agents. SD.AI, the national AI program Michael launched in January, has put AI chatbots in schools and runs Burkrat, a service that the government defines as a state-created AI-based digital assistant that helps institutions deliver modern and efficient customer service. Those agents are already acting inside government systems, which is exactly the kind of access the new ID is meant to scope down. Estonia has spent 2 decades building the digital plumbing that this idea would run on. And after a major cyber attack in 2007, the government and Estonian firm GuardTime built the KSI blockchain, a keyless signature system that has secured the integrity of judicial and property records since 2012, later expanding into healthcare because, of course. The country racked up first before this one, too. Estonia's parliament declared internet access a universal service in 2000, decades before most governments treated broadband as a right. In 2023, its parliamentary election became the first in the world where more votes were cast online than in paper. Okay. So a digital ID for an agent, you know what it sounds like? It sounds like another case for the Nostr protocol, being able to have some kind of linked or unlinked identity. Like you have an AI agent, you link it to somehow or another your private key for Nostr, have it generate another public key for just your AI agent, or just spin up a whole new thing altogether. But I guarantee you, the way that governments are going to be doing it is going to be different because they're going to want to know what agent was acting on whose behalf for what purposes. There's no way around that for normie land. Now, the geeks and the nerds will definitely, through open source, will find out a way to either spoof an ID on an agent or whatever. But this is coming. There will be driver's licenses for AI agents. Now, on to this one. CME chief executive says company plans to sue the CFTC after perpetual futures approval. CoinDesk Nicholas Day is writing. CME chief executive Terrence Duffy said the derivatives provider planned to sue the U.S. Commodity Futures Trading Commission after it approved perpetual futures products earlier this month. The approval of Kalshi's perpetual futures product did not meet the requirements of the Dodd-Frank Act governing swaps, he told CNBC on Wednesday. Quote, under Dodd-Frank, it clearly defines what a swap is and what a future is, and when there's two parties exchanging payments to each other, that's deemed a swap. So, if anything, these products that he supposedly approved as futures are not futures, they would be swaps. And if they're swaps, and let's say, as you know, there's different requirements in order to participate in the swap market, Terrence Duffy said. Duffy, who is stepping down from his role next year, said CME would, quote, need to understand what the rules of the road are first before it would consider listing perpetual futures contracts of its own, but that those rules are not very clear at present. Duffy went further when asked if he thought the CFTC was misrepresenting certain facts, saying that he did believe, to an extent, that the agency was. He pointed to the CFTC's release on 24/7 trading, saying that the agency described that as a rule when it was not a rule. Quote, I think there's a lot of problems, he said. So it's weird to see the CME sue something like the CFTC. I don't think it happens very often, but this is going to be an interesting one because if they win, Kalshi and Polymarket can't offer perpetual futures, and a whole bunch of other platforms would be directly affected as well. So this is going to be one to watch most definitely. Aztec hit by second $2.1 million exploit in less than a week. Cointelegraph Zoltan Vardai. Deprecated Aztec infrastructure has suffered a second exploit within days, adding to concerns about the security of abandoned smart contract infrastructure. Aztec's private roll-up bridge was exploited on Thursday for 1,158 Ether, 150,000 DAI, and 0.46 REN BTC, totaling about $2.15 million. The preliminary analysis found that the attacker used a false roll-up proof to trick the protocol into releasing assets from its reserves to the attacker's address. Aztec Labs confirmed the exploit, adding that about $2 million was transferred from the immutable smart contract of a payment product deprecated back in 2022, for which Aztec Labs held no admin keys nor ability to pause transactions. Aztec Labs said that the incident is separate from the $2.1 million stolen from Aztec's Connect smart contract on Sunday. Aztec Connect was a privacy-focused roll-up that was deprecated in March of 2023, with the team halting deposits and shifting resources to the next-generation Aztec network. Cointelegraph reached out, did not receive a reply. The two Aztec exploits, along with the $1.3 million stolen from decentralized exchange Radium earlier this month, renewed concerns about deprecated smart contracts, as the three incidents stem from vulnerabilities in abandoned infrastructure. Quote, old contracts continue to be bug bounties available to just any hacker. With protocols removing their responsibility to maintain them, they can become even more tempting, he wrote on X. Despite Aztec Connect being deprecated, the attacker extracted over $2.1 million in the initial exploit, as the immutable contract was still holding legacy user assets. Holy shit, guys. So if you want it boiled down, this is basically a bunch of defunct smart contracts on this DeFi platform that's been completely hacked open because people just, I don't know, it sounds to me like a bunch of people forgot that they even had assets in this thing. See, that's how bad DeFi is. I mean, it is not worthy of anyone's time. Not right now. I do believe in the future that there will be a place for some format of decentralized finance, but this is not the time, this is not the place, and this is not the reasons why, because DeFi at this point has only been basically about shitcoining, just swapping one shitcoin for another in a smart contract. It's not really financing anything. It's financing stupidity, but it's not financing house building or building businesses or, making car loans or anything like that. It's not finance other than to finance your shitcoin addiction. So just be aware. That is all that I've got for you today. And starting tomorrow, I will be doing some reruns. They're all going to be, most of them are going to be about soil or farming, or the Cathedral series, which is about farming, ranching, grazing, all kinds of stuff. All that is going to be coming to you starting tomorrow. I will be on the road tomorrow morning. Tomorrow morning, I will be on the road and hopefully hit Moab, Utah by the end of the day, continuing on into Southwest Colorado, where I hope to get a little bit of, some mental time off. And I will see you when I get back. And I believe that's going to be like the 2nd, possibly the 3rd of July. But until then, I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.